Welcome back, ladies and gentlemen, to the All in Crypto podcast. I am your host, Rupert, and today I am both delighted and excited to be joined by Ed Nwokedi, who, of course, is the CEO of Red Swan. Now, Red Swan is a company out there with a mission to transform the real estate markets through leveraging distributed ledger technology, such as Hedera, Polygon, and Ethereum. So, welcome on board, Ed. How are you?
Doing great, Rupert. Thanks for inviting me. Really awesome to be here.
Yeah, the pleasure is all mine. And I think we spoke, it might have just been a little over a year ago. When I initially heard about Red Swan, I heard about what you guys were doing with Hedera and, of course, a number of other blockchains. It really attracted me and sort of made me seek you out to do that initial interview. And here you are a year later to talk once again about Red Swan, some of the things you guys have been doing, some of the things you're looking to do in the future, what it means for the kind of investor community as a whole. As Red Swan is a great example of the convergence between a traditional sort of financial industry, a traditional industry that's invested in, and the cryptocurrency space, and how both of these industries are coming together to essentially enable more of a global, accessible market to the world. And I think Red Swan's very much at the heart of that. So some of my guests or some of my viewers may not be familiar with Red Swan. I think the best place for us to start is just to recap and to give an overview of what it is you guys do.
Yeah, well, thank you. And really, I enjoyed that last interview we had. You had some very good questions. What is Red Swan? We're a global marketplace of commercial real estate investments. We digitize commercial real estate into securities, which is like shares of stock. And then we have the platform that issues those securities in a regulated fashion to buyers, both accredited investors, international investors, and then basically have the management capabilities for them to manage their book of business and on their dash panel, but also the disposition for liquidity, which is the ATS, allows them now to sell off their position and go back to liquidity situation. So we like to think that we are providing the full service for customers because just having a platform to issue tokens is starting point, but actually knowing and having the experience in how to actually sell a security and also sell real estate investments takes a special level of expertise, and then being able to provide that secondary trading by having market makers that can actually make that activity provide that liquidity pretty quickly is also important for the entire industry. So when you have that, then you can actually provide service to your customers completely. If you don't have that, then you have to find some partners to come on board.
Yeah, so let's talk a little bit about the sort of fundamental changes. I know you've got a long history in the industry that you're in. Let's talk about some of the fundamental changes. I know you spoke about, and I've heard you speak previously about when you worked for a previous employer, you really noticed that when it came to the sort of deals that you were facilitating in the property market, they were only really accessible for a certain type of client. And what I really want to do is sort of talk about some of the benefits that tokenizing through some of these distributed ledgers is bringing to your industry. How is it fundamentally changing the industry that you're in and where the industry is going today?
Good question. I think education is very important. People don't know how to invest until they're given an opportunity to invest. And when you talk about real estate, I've always seen in my career, and I've sold commercial real estate in capital markets for 17 years with Cushman Wakefield and also with Collier. So I've seen a lot of transactions, and most of the nice, successful transactions are owned by institutions. They have the right resources to build correctly, plan correctly, and also do a fundamentally great job. So the yield play for those projects are with larger institutions. Smaller, more risky projects, which may be duplexes or older properties with potentially a lot of deferred maintenance. Those are riskier propositions, and you tend to see smaller investors getting to those because they're more desperate for capital, and they also lower the threshold for investors to come in. So when you see the difference between successful real estate transactions and high risk, lower success. And not all of them are non-successful. Some of them are very successful, but the odds are you're going to have lower success on a more high risk investment in real estate. So I think tokenization now allows investors, both large and small, to be able to come in and buy a fractional share of interest, following the herd. I mean, you just pick what JP Morgan Chase is picking, or what some of the large successful real estate investors are picking, and follow their lead. And they're successful, you'll be successful. And you also learn why they're making those investments, because now you see the whole world as an opportunity. You're seeing the yields coming from the Middle East. You're seeing yields coming from Japan in terms of property. You're seeing yield coming from the United States, apartments, hotels, industrial, and you get to compare which ones can give you what you're looking for based on the cost of capital that you're expecting. So it makes it a lot interesting, I think, very educational. And now people can start diversifying their portfolio, much like a REIT, but with much more knowledge about what you're investing in, as opposed to with a REIT, you're just handing them a check, do what you want. I don't know what you're doing. I have no idea what the cost structure is, the overhead structure. I have no idea, but I trust your brand is going to bring me a decent yield because of your track record. That's a REIT. I think a more personalized REIT, where I pick, I like multifamily. I pick all the emerging multifamily markets, and I want all units that are just suburban but in great locations next to good schools. I can make that happen, spending $100 if I'm the secondary market, $100 per allocation on all these properties. That's success to me. That's education. That's a way to take yourself into wealthy situations.
Yeah, I think it's brilliant. It really does make a lot of sense. Through tokenization, you're really lowering the sort of barrier to entry. You're opening up what was previously kind of concealed for significantly larger sized investors, funds, institutions. You're now opening that market up to the everyday individual. And you're doing that whilst also enabling access to global markets. So, for example, I'm here in the UK. It might only be, up until the current transformation that we're going through, accessible for me to invest within the UK. Whereas now, through what you guys are doing with tokenization, not only are you lowering the actual cost to entry, you're also opening the world up as a kind of monopoly board is definitely not the right terminology here, but you're allowing me to put my capital to work elsewhere and go after better yields that might be offered in other countries.
Exactly.
Country to country offer, I'm sure, very different yields. Are there any kind of countries out there on this topic, before we come back to what we were talking about, that you think offer higher yields than others? Are there countries out there, have you noticed that, surely in your career, that certain areas, certain countries, certain geographic locations offer significantly better yields than others?
Yes. Internationally, I'm learning more because I wasn't selling a lot of international properties, but yields in the United States in different markets can vary 300, 400 basis points, from 3% to 4%, just because you're picking certain submarkets that have high crime, low crime, no crime, good schools. But internationally, in your core markets like Tokyo, Japan, or Seoul, Korea, you're going to have lower yields because it's a very tight market, easy to be successful, high demand. But if you go to some of the suburban markets, less demand, less population, but still can provide a decent level of income and success if you pick the right location. So those might offer you a higher yield in some of those markets, but they're smaller markets. I think in the emerging markets, we're in Lagos, Nigeria, because we want to cover the pretty much Central Africa from Kenya to Ghana to Nigeria, because we see a lot of the adoption in cryptocurrency in that marketplace, very, very high adoption. And so therefore they're going to be looking for a way to offset deflation of their currency, inflation in general, by buying dollar-backed yielded assets. So we see that as a big opportunity. But there, as we look at those assets that they're offering, because their cost of labor to build is low and their density is so high and the capital is not available, he or she who can build anything that will house a number of people and does it at a decent level would be fully occupied. You'd be fully occupied before you even finish building it because the demand is so strong. So the problem is access to capital, and we hope we can change that to actually meet the demand, especially in this areas of student housing. We think that's there's a strong demand for student housing. Only 10% of the market is being serviced right now. So yeah, international, there's various levels, but that's what you're right. A person can actually pick and choose in areas that they haven't even visited yet, but hopefully will visit. I mean, one of the nice projects we're trying to put on is a beachfront collection portfolio of beachfront hotels, so that people can actually go to a very, very exclusive but small boutique beachfront hotels around, in one island, and have a piece of that, own a piece of that. So as it makes revenue, you're making yield. You can turn the yield or the profit you make and put it back into a 2-week stay if you like. But what an opportunity! It's like to be able to stay in a small original Ritz-Carlton with 80 beds right on the beach with that kind of quality service. I mean, these are things that people don't have access to. Only those who can fly in with the G50s can actually have access to those kind of properties on private beaches. So that's what I think blockchain and tokenization can do for the world with regards to investments. It doesn't always have to just be investments for making yield. It's sometimes you make an investment that's more personal, more closely related to your heart or your thoughts and your morals. So that's where you make your investments. And I think beachfront might hit some people the right way.
Yeah, I think so as well. And I think we're already getting into, and we've looked at quite a few already. We certainly touched on quite a few already, benefits that tokenization and kind of utilizing a distributed ledger when it comes to this sector it is really bringing. We've spoke about the lowering the sort of barrier to entry. We've spoken about how it makes markets now global, or I mean, markets have always been global, but it allows you kind of global access to markets. There's also things that we didn't really touch on that we'll get into, I'm sure, a little bit later on in this talk, where it comes to actually raising everybody up, providing capital to areas that perhaps couldn't get capital to them previously in this kind of a manner. And also you mentioned things like actually, maybe you've not been able to get access to something that tickles your fancy in the form of a beach hut. Now you've got that through this. And of course, these are all sort of benefits brought via tokenization. And I want to very much focus on, if I'm somebody that wants to get into real estate, if I'm somebody that wants to get into property, me actually doing that. So Red Swan is the platform where you guys offer deals. I kind of want to go through the process here of how that actually works, because there's lots of people that are going to listen to this and they're going to go, I've always wanted to get into property. I don't quite have the capital to buy, a complex or some sort of student housing or things like this, but I very much think it's a good idea. Well, now you can own a fraction of that and get a yield from it. Let's talk through that whole process. If I'm somebody that wants to get into that, how do I go about that?
Great. I appreciate that. I think the process is really simple, and we actually had to augment the process after getting our license with FINRA, because the SEC probed a lot of the activities in the process of delivery, and we kind of made some changes based on feedback that we heard. But now the process is very, very simple. So you go online, you see opportunities, more likely funds. I said we're moving everything into large funds. So the fund for USA has got $4 billion worth of multifamily hospitality assets is our USA fund. And then an Africa fund is going to be roughly about $1 billion, targeting, like I said, student housing, new development projects. And then we have the GCC, where we have this $3.5 billion collection of assets, which we created the GCC fund for. But a person now can go there, they'll see these opportunities on our platform, be able to click and say, for example, expression of interest, because you can look at what the desktop version of information there is on that asset, and you can sign a confidentiality to see more, but you can't really participate in purchasing until you go through a KYC process. So that's one of the things that we've changed, is the KYC process.
Make that clear, Ed, as well, because I think in crypto we've all kind of shy a little bit away from KYC and this sort of stuff, but actually let's not beat around the bush here. These are securities. There's no getting around that, and there's certain things you need to do when it comes to buying securities, like KYC. This is how the world works. Let's maybe stress that point a little bit, because I think it's an important point for people to realize. If you want to get into property, you're going to have to go through that anyway.
Correct. So for us, we're recycling the members of the platform, like 16,000 members so far, to go through automated AI-based KYC before they can really have access to do anything. And the reason for that is because we need to know from second one who is inquiring about securities. That's the rule. And so if you don't know that, then you have people who can get in trouble by trying to make mistakes or passing disinformation out there. So we want to make sure it's a simple step-by-step process. So you KYC, which is just having a national ID, a photograph, a biometric thumbprint, and you're done. You're good for 12 months. And so international goes through KYC. U.S. has one more requirement, which they have to be accredited investors. So if you're a United States citizen, you have to have a certain level of income and a certain amount of assets to buy these securities. Hopefully that will change as things become more commonplace. But right now, you have to be accredited in the United States. So a lot of our focus is really international investors, because it's much more easier for them to process. They can buy lower quantities, and their processing is, like I said, much more 1, 2, 3. But you express interest, lets us know who you are, how much you're interested in investing on the project. Meanwhile, we're keeping track of all the expressed interest in the project to get to a total commitment. And then when we hit the total commitment, we close out. So these will be for portfolio type of investments where there's a minimum threshold of how much capital has to be raised. And so everyone's informed about this process. And as soon as that number is hit or that level is hit, they're now coming to process payment, which means wire your capital into our escrow account, and then from there be able to receive your digital shares, which will be sent to your wallet.
Wow. Yeah. No, it kind of seems a lot easier than. I've bought properties in the past, and it can be quite a cumbersome process. Certainly, if it's your first time doing it, but sort of going through that process, getting this. When we talk about tokenization, is it in the form of an NFT? What does the tokenization kind of side of things look like?
The tokenization is just creating a digital security. It's not an NFT, although we could wrap a token with an NFT just to give it some visibility, three-dimensional visibility. But a token is just a simple, digital code that sits in your wallet that is recorded on the blockchain to verify a fact, right? So the number of tokens you buy is now verified. You see the code, you see the number of them in your wallet, and so you know what you have. And that's the easiest process, because when I was selling real estate at some of the major companies, to close a property could take 6 months, sometimes 9 months. So investors are sitting around for 6 months, 9 months before it closes. And then there's fees all along the way for every process. So you have a good 4 to 7% are fees in order to process closing, versus you're talking less than 25 basis points on blockchain. So it makes a lot more sense.
Yeah, and I think that's another. We're sort of, as we're going along, we're really unlocking all the benefits that come with this kind of movement. And of course, one is it just makes the whole process a lot cheaper in many regards. And actually, if we want to make these markets accessible to the masses, or as accessible as they possibly can be, cost is a big factor. Because some people can get sort of priced out just based on cost of actually facilitating all of this alone. And once we've done that, it's very hard to sort of say, but you mentioned that now what you're looking to do is move your portfolio actually into funds. Is that going to be with every specific property deal? Will it come under a fund, or what's that kind of transformation? What does that look like? Because I know the last time we spoke, I don't believe you were moving things into funds, but it seems like that's a direction you guys have sort of pivoted towards, which I think is a very interesting one. I don't know if we could sort of spend a minute talking about
that. Sure. You're right. Before, you would go and you would see individual properties that have been tokenized, and that sponsor is now offering those tokens for sale, and we're representing the sponsor. When you have a fund, you have a one entity that's selling shares. It's a is a closed-end fund, so there's a finite number of shares to be issued. So you're buying shares, and that fund is buying into the properties that it has in its escrow account. So it's holding on, let's say, $300 million worth of properties, and there might be 8 properties that you're looking at. You get a chance to see the performance of all the 8 properties in the fund. You see the average fund performance. You can now buy shares at $1 a share of that fund and hold that in your wallet. So now you are a co-owner, a fractional co-owner of all those properties in the fund. And the fund continues to buy more and more properties until it's actually sold out of shares. Then it manages the yield from those properties, always providing dividends to the shareholders. So the shareholders now can see the property increasing in value based on it increasing in revenue, or they can sell their shares to somebody else who sees that as attractive yield for either a higher or lower price. That's market to determine that. But it just allows this accessibility now for quality. And so I think that's really the core of the technology and how it benefits.
Yeah, and I think also that to me, that just for myself, I know everyone's very focused on the cryptocurrency space right now, but any intelligent investor understands the benefit of diversification. And with the kind of volatility that you see in the cryptocurrency space, actually diversification, I think, into the real estate sector makes a lot of sense. And to be able to do that in a global fashion, in a fractionalized kind of manner, is extremely attractive, certainly in regards to a fund, because the problem is if you've got to sort of bet on this property or this property or this property or this property, you're going to be pulling your hair out, or I would if I had any, trying to figure out, which one should I go for? Whereas if you've got this fund and it's got this track record and actually it's been going for a while and you can see the sort of yield that's given off of it, I think that makes for a really attractive kind of proposition. Again, we're big crypto enthusiasts here, so we love the fact that there's a distributed ledger aspect with this whole process. I think actually the kind of fund idea is extremely attractive. And what sort of, I don't know if you can talk about, are there kind of average returns you get from this sort of stuff? There's a lot of questions that I have in regards to the funds. One would be, in regards to returns, is this something that's paid out like a dividend? How do the returns sort of work on the funds?
The returns work just like they do in real estate today. Private real estate companies may issue dividends quarterly or may issue dividends annually. And the dividends are based on the net disposable income at the end of each year. So same thing for the funds. So the properties are, distributing income. It goes into the fund as X dollars. They have X amount of shareholders, and it goes into one big pot. You have X amount of shareholders in the fund. They divide up, the shareholders pro rata based on their level of ownership, and then automatically smart contracts calculate the amount of dividends to be issued to each shareholder, and boom, it gets sent out of the escrow department. So that's the process for that. And you're absolutely right. I had a very interesting phone call, or I'm sorry, dinner conversation with some hedge fund guys when I was in London, and I was amazed that they're telling me that, talk about diversification, they may have 2,000 or 20,000 positions invested in different things on a daily basis. 20,000 positions, all computer, of course, assisted in managing these investments. Parameters are already preset. But imagine how they're doing it and how they get very strong yields because they're using technology to help them make decisions based on data. We now have individuals who have that opportunity as well with tokenized real estate, because they can they can program the spending of their dollars on a dollar cost average basis to go to all these recommended projects that are either in the fund or even individual in different countries, and all of a sudden just start accumulating wealth.
Yeah, it's a very interesting concept. I think it's quite high over most people's heads. It's kind of like how the markets were before the tokenization, and this kind of allowing for more of a sort of retail investor to get a piece of the action, if you will. I think when we talk about what these hedge funds do with these kind of systems that use technology to arbitrage things, even that is now going to become eventually more accessible to retail. And we spoke off camera a little bit about the kind of use of AI in
Right.
regards to all of these systems. I don't know if you've got any interesting thoughts on that as it relates maybe to property, or is there any kind of an AI integration before we get back to the funds more sort of
Yeah,
fundamentally?
well, we're definitely embracing AI as we speak. As we're building our new website, we're starting off with a landing page with all of our funds on it, but it's AI enabled, meaning that all of our customer suitability is going to be AI enabled. So you're now representing, you have an AI agent representing you throughout your experience with Red Swan. And so now that they have your information in terms of recommendations for projects or funds or investments that meet your needs in terms of the visibility, in terms of the location, it can make recommendations on a regular basis, saving you a lot of hassle because, again, it's getting its data from many different places to make the perfect recommendation for your pieces of investment.
Yeah, it's amazing. I mean, the world that we're moving towards is truly one. I mean, distributed ledger is just one thing that's kind of going on here in the grander scheme of things. AI is another massive one. And I think in regards to the investment markets, it's going to fundamentally change them. I think that's very, very exciting. To shift perhaps and swing the pendulum back to the funds, we've spoken about the sort of yields a little bit and the dividend that you'll get off them and how that'll work. What about the actual fund token itself? So let's say I put $1,000 or $10,000 into one of these funds. How does that fund then move? Is this something that trades on a kind of order book? I'm just trying to work out how the fund fluctuates in terms of price and valuation. So my $10,000 theoretically, let's say I bought today, property's doing really well. What does that look like in tomorrow's world? Does that move up with the price? How does this thing get valued, or is it?
Also, good questions. Boy, Rupert, you just know how to throw them out
Yeah.
there. No, it's first of all, you have the issuance, and when you issue shares, you issue at a set price. So in our case, $1 a share for 20 million shares is going to be issued. And so when you're buying for your 10,000 shares, you're buying at $1 a share. So you put $10,000 in, you have $1 a share, and you now have 10,000 shares, whatever piece of real estate or multiple pieces of real estate you bought. So now when you want to sell, it is market driven totally. I mean, there's a bid and ask. So you're asking now, your property has gone up from $1 a share to $1.12 because they raise the rents and the income is a little higher. So the dividend yield is a little higher. So therefore you have more value within your coin. So it went from $1 an ounce to $1.12. You put out there, say, I want $1.12, and it's now posted on ATS. And so now all the registered KYC investors globally and also in the US can see your asking price for the shares. They can see the yield those shares are paying from the platform. And they can say, you know what, I'm gonna meet your 112 ask, or I'm gonna counter offer you 110, right? And then if the broker dealer comes back to you with 110 counter offer and you accept that, then now that is a closed transaction that moves towards the final movement of the shares from one buyer to the seller, or one seller to the buyer. So that's the typical process of the front end and the back end. And so in case you want to sell your 10,000 shares on the secondary market, you're now posting up your ask price, and that's how you list your shares for sale.
Yeah, because I'm sure many people would be curious about that. Certainly that perhaps aren't just interested in the yield, but the kind of return that their shares of the deal or of the fund can actually get them. And the reason I ask so many questions on it really is because I know there's going to be a lot of people like myself out there that are interested in real estate, certainly commercial real estate, globally, and they're going to really want to sort of dive into this in a lot more detail. We're going to leave links to absolutely everything in the description. Don't worry about that, guys. Where you can find Red Swan and sort of get involved. We've spoke quite a bit, I think, about actually how the more average investor can get involved in this and what it's doing for them. I want to spend a little bit of time now about actually talking about the other side of the market, which is the people actually enabling these deals, the people that are perhaps building these deals, and what it means for them. How does this, through, I guess, crowdsourcing, fundamentally change the game for them?
Good question again. It changes for the sponsor in many different levels, because a sponsor typically buys a property, enhances the value through value add management or adding fixtures, and then he sells a property, he or she, and makes a profit, right? That's typically their process. Many do not hold for a long period of time because their investors, they came in, want that money back 3 to 5 years. So they're kind of forced to sell out and then start all over again. Well, if they're able to hold their asset, sell the shares, like let's say that they have a $50 million asset with a $25 million loan, and they want to raise, if they sold it all, they'll make $25 million less costs on that $25 million equity they have in the building. But let's say that they want to tokenize it instead, and instead of taking $20 million and selling off the entire building, they take back $20 million. They're still 100% GP of the property, and now they have new shareholders they have to pay a dividend to, but they now have $20 million that they can either pay off shareholders want to get out, take the excess capital, reinvest in another property, and still have that, the assets under management continuing to grow and grow and grow. And their income will also continue to grow and grow and grow, because now every year as they clear their profit, right, and they have, the income for the year, they can actually participate on their waterfall based on that. So if you pay off 8%, for example, to your preferred shareholders, and you now have some money left over, you're splitting that 50-50, 70-30 between the GP and the LP shares. But the GP has really no more equity in the property. So that money coming in, that overage, is just jacking up their overall, annual returns, right? So it's a great position for the GP. Also allows them, not to have a forced sale. But in some cases where debt is, I call it toxic, this variable debt is going up, and you got to buy your rate locks in order to, stop the bank from foreclosing. You might want to pay those off or pay them down substantially, so that you don't have that kind of noose around your neck that it could tighten later on, because you just don't know what's going to happen, right? And so you take a gamble, it could go the wrong way. So you can pay rate locks, which is kind of insurance, but that's a high cost. Or you can use tokenization to recapitalize more preferred equity into the deal at a fixed rate of yield that is good forever. And then, now you can actually function with no debt or very little debt, and I think continue to operate the property. So there are a lot of problems we can solve once we understand what the problem is, because it's a matter of offering an opportunity to either equity providers or debt providers.
Yeah, and again, like this is really what I wanted out of this conversation. As we've gone along, we're really unlocking all these kind of benefits that bringing property and distributed ledgers together and actually doing things like tokenization, fractionalizing, opening global markets up to investors. It's not just good for investors. Why I wanted to ask that question, because it's not only are we helping investors out here through a number of benefits that we've touched on, we're actually helping out the other side of that, which is the market really as a whole, in terms of actually providing liquidity where it's needed. Also, if you're an investor and you buy 10,000 shares of a fund, instead of, let's say you would put that, I don't know what you'd get for 10,000, or let's say you put 100,000, couple of 100,000 in, that's probably going to be a lot more liquid to pull that out if you need that capital than if you had it in a property and you had to go through the whole process of things. I don't know if you want to maybe talk about that a little bit. If you're somebody that, because there's a liquidity efficiency of going on there.
No, that's very true. So if you're in a traditional real estate transaction, you're buying into a limited partnership, and the GP, the general partner, has full control of how that property is going to be run and when that property is going to be sold and how much is going to be sold for. So the limited partners don't have much decision making on that. So when they buy in, and for some reason, it's the general partners predicting a 5-year hold, and in the 5 years you get your capital back and your profits, and it's going to be an IRR of X%. That's what you believed in. That's what you invested in. Well, something may happen between now and 5 years, and you need capital right now, and you have $500,000 stuck in that one investment, and basically you go back to the sponsor and say, hey, can you buy me out? I need my money right now. I can almost guarantee that if he could, most of them will say no, but if they could, that payout would be pennies on the dollar, right, to what your shares are worth. So having it in tokenized form, you now can take those shares and put it to the market and say, hey, market, this is paying me 10% return. I own 10,000 shares of them. I'm asking just $1 a share, and it's yours. And somebody might say, wait, I like that real estate. I love the location. I've been looking for something like that. I'll buy 5,000 shares, or I'll buy the full 10,000 shares at $1, or I'll buy 5,000 shares at $1 and try to get the other 5,090 cents. Whatever. That's opportunity there for liquidity that has never been there for that investor before. And just because of that, billions, if not trillions of dollars of investment equity remains outside of real estate because they can't afford to tie up their money for that period of time. And it's not even you can guarantee in 5 years that they can sell that property and give your money back. You might have COVID situation that came into play, and property values drop down. There's no cash flow, and you can't sell. They can't put it on the market to sell. So you never guaranteed your liquidity, but if you have digital shares, you're guaranteed you can put it out there and let thousands, if not millions, of people look at your ask price and make a competitive liquidity offer to take you out. That's a major benefit that once you have it, you won't go without it.
I feel like all of these are major benefits, some perhaps more impactful to the industry as a whole, but certainly the industry is getting impacted in a massive way. And actually, the opportunity to invest, the kind of it's not perhaps the democratization of markets, but the kind of opening up of them. Certainly, these markets is not just good for investors; it's good for the people that are making the deals. It's good for the people that own the deals. It's good for the industry as a whole. And this is, I think, the reason that distributed ledgers are going to get adopted is for the same reason that we prefer not to send letters anymore and we'll send an email, because it's a lot more convenient. It brings a whole list of benefits with it. You know, like you've got your email saved. You know what's what. You know who you've sent to. It's faster. It's cheaper, et cetera, et cetera, et cetera. The reason that I believe, and we're looking at a quite specific use case for distributed ledgers is going to get adopted, is because it just makes the whole process better, more efficient, et cetera, et cetera, et cetera. And that really brings me on to a question that I'm very excited to ask in regards to this market as a whole. So I know I listened to your, you were at a Hedera conference and you were talking in regards to real world assets. And I think you did an amazing job, by the way, Ed. But you spoke about how today you guys are currently sat with around about $5 billion worth of assets that you've managed to tokenize, and you've got about $3 billion in the pipelines. Where do you see this going? I want to throw that wild card out there and saying this market as a whole is probably in the multi-trillions. Where do you see this all going? Do you think the majority of real estate is going to end up tokenized in this kind of, like, what are your thoughts on all of this?
You know, we speak to major institutions as well as family offices and people who own a lot of real estate. And the ones, most of them right now don't know about tokenization and still associate it with, some sort of cryptocurrency. But there are those who are larger players in the industry, like Hines, for example, is a big development company. They're dabbling with tokenization internally. They're putting together a system for tokenizing their real estate to try to make it more attractive for international investors to participate. And so we're starting to see that there's a demand coming from, because they have a lot to lose if they don't get this right. If you don't start tokenizing your assets and pulling your equity out of these deals, and others do, they start allowing their LP shareholders to have immediate liquidity. Starwood had a big problem with liquidity on many of his partnerships, didn't have the cash to pay people off, so they had to freeze on liquidity. Blockchain takes care of that problem, and I think that's huge for property owners. And once they understand this, a way that they can use this tool to raise capital and also to reduce risk, there's no way they're going to, go the other way. So we're just ramping up, in terms of like the big corporations putting guardrails up, putting together the system that will take care of all the problems very efficiently, because we can see the herd, the Mustangs, herd of Mustangs. We can hear the footsteps coming, right? And so we're just trying to make sure we're ready for that, because you don't want to fail when you have that many Mustangs coming at you. You want to be able to wrestle them all in and take them and corral them into the barn. And so that's kind of the position we're in right now. Is we see all this activity coming because we're perpetuating it. We're tokenizing. We're bringing it to the market, and we're seeing institutions saying they want to buy it. So finally, even big institutions are saying we want to buy a share of what it is you tokenize and put into your fund, because we want to diversify our holdings to be digital. And right now, this is the only option for them to do that.
Yeah, it truly is amazing. It's kind of like, these institutions, they're going to have to get on board with the internet. They can't just stay in branch. They've now got to get on board with this kind of revolution that's taking place with tokenization. And it's for the benefits, quite a few of them we've touched on. It really is interesting. What is the sort of size of the overall commercial real estate market globally out there, Ed? I don't know if I'm really testing your knowledge here now.
I see the number jumping around. I see it in terms of income producing real estate assets, and that could be power plants, apartment buildings, retail centers, income producing property. We see that at around $75 trillion. And so that's the market globally that we want to go after, but in select parts of the world right now where we think we'll be more successful. So we're going to those markets, and we're getting licensed to do business in those markets, so that we can, like I said, provide full service to everyone that does business with the company.
Yeah, and I mean, you really had the foresight. I think it was 2018, was it? You got your license with the SEC?
No, 2018 to be an IRA for the registered investment advisor for SEC, and then 2024 early to be licensed with FINRA as a broker, digital broker dealer. Yeah, so.
Yeah, and it just goes to show. I mean, this space is. I mean, we've still in the likes of the US had an SEC that kind of didn't really give that much clarity when it came to digital assets. Obviously, securities are securities. I think they've always been pretty down the middle on that, of course. But when it comes to the industry more broadly, they've been a little bit hesitant to give, I think, decisive guidance on it. However, that's very much going to change. And I think the beautiful thing is with how Red Swan's positioned is, like you say, these Mustangs are very much heading towards us, and you need to be ready for that. You need to have the kind of platform that's actually going to enable this to take place for the benefits and reasons that we've spoken about. And what are some of the blockchains? I mean, I know myself that you're actually using to enable the tokenization of all this, and how has that experience been? Have there been blockchains that you've sort of, or distributed ledgers that you've preferred, or you might not want to say, which is totally fine, then others?
Yeah. We started with Ethereum, and we realized that it was too expensive for the average transaction, especially as we realized that we're seeing more activity internationally than we are seeing nationally. And internationally, we have to make sure that the fees are lower, not higher. So we had to kind of move from Ethereum to Polygon, and then now we're seeing a much better benefit with Hedera because there's just a lot of reasons. I mean, the speed, the latency, the governing council gives a lot of credibility. When you're coming to a major real estate owner that has $3 billion worth of real estate, and you're talking about tokenizing their projects, they want to know that you're working with quality people behind you. They want to see, hey, this blockchain has these IBM and Microsoft and Nomura Capital as governing councils who are managing the blockchain. That's impressive. That gives them relief that there's not some yo-yo in this bedroom who can manipulate a blockchain that they're doing millions or not billions of dollars worth of transactions to. So that makes them feel more comfortable, and that's one reason why I think Hedera is a good partner, because also they're always looking at ways to inject into the ecosystem that will make it easier to do other types of applications along with that security token. So, of course, a wallet, or the transferability to other blockchains, or this, well, speed is one thing, and cost is also substantially reduced. But many ways we're looking at ways in which we can enhance the user experience. And I think I like partners who think like that, because as they develop something that enhances the user experience, and we're working with them, we're automatically getting the benefit of that. And so that's really good. And there are others. I mean, other blockchains that we like that are doing the same, and we are definitely going to mint on more than one. But we think that keeping it to a minimum level of partners that we can push most of our projects through will be good for our partners, good for our customers, because they'll be seeing the cycle of locked value on the chain as it splinters all the way around for DeFi or for all these other types of applications, stablecoin, interoperability with stablecoins. I mean, there's so much is out there. You have Bitcoin, you won't have to sell your Bitcoin to buy real estate. You can borrow at such a low rate off your Bitcoin, buy real estate. Now you're getting 7% from real estate, and you're borrowing at 3% from Bitcoin. You're in a good situation, and your Bitcoin is still going long. So these are options that people never had in the past, who will have now. And if they have digital currency, they'll have that much more optionality.
This is going to bring me perfectly on to my next question. But before I do that, just a quick comment on Hedera. I do think when people sort of discover the governing council, they kind of breathe a sigh of relief. The crypto space has been tarnished at various points through various bad actors. And I think when they see the governing council and the 32 members that are on there, they kind of go, wow, hang on. This is new. This kind of, puts me at ease a little bit. And actually, Hedera seems to be doing wonderful things when it comes to tokenizing securities specifically. The Nairobi Securities Exchange just became the 32nd council member, which was great to see. And I know they have plans to essentially start to tokenize some of their securities. You see Aberdeen in the UK, you see Archer, you see all these people looking to actually do tokenized securities through Hedera. And I think it makes it a really great choice. And it's one of the things that initially attracted me to Red Swan. Was I kind of thought, okay, you guys are looking to leverage Hedera, but other blockchains, which I think is a smart choice, by the way. Not everyone's. It's very tribalistic, isn't it, in the cryptocurrency space, and that's a shame, because people often won't take advantage of the opportunities that are out there because of core beliefs. When it comes to these blockchains that might be misfounded, which is a shame, really, isn't it? The question that I really wanted to come on to after that, now I've just made that little segment there on Hedera, is what do you see kind of DeFi opportunities coming on the back end of tokenization? So you've got these tokenized real estate tokens. You can hold them, you can get a yield on them. Do in the future, or do you have any plans to perhaps look to leverage these in a kind of DeFi or traditional financial manner, borrow against them? Maybe, I don't know if providing liquidity with them would be an option. I don't really know how that would work entirely, but do you see opportunities coming out of having these tokens, or is that quite hard to do with securities?
No, I see a lot of opportunities coming out. We see opportunities for stabilizing the treasuries of blockchains, because they're not diversified. They're all in with their currency. And so it fluctuates. Buying real estate helps them to stabilize their own treasury. But then when you look at, on another level, I mean, it's I just think giving a lot of diversification. I mean, there's you're asking basically how that we can have a benefit, and I'm talking about from a Hedera standpoint, but you're looking at from a user standpoint as well. Maybe you can explain that question, and I can answer a little bit better, because I think I hear what you're talking about.
So no, absolutely. So for example, you mentioned with Bitcoin, you might not have to sell your Bitcoin anymore. You can borrow against it. So with these real estate tokens,
real estate, when you're buying real estate, you're buying the equity. If you're putting in preferred equity, that's all cash. So therefore, there's no debt on that position. So as the holder of your 10,000 shares, for example, that's all cash. There's no debt on those 10,000 shares. You can now take that to do DeFi, lock it into a protocol
Yes.
and say, look, I want to borrow against this because this token is making 10% return, and I want to borrow against it so that I can buy something else. And somebody might give you a loan at a certain rate because that's great collateral. And so, yes, that's DeFi on real estate shares. If you think about it, real estate is the number one collateralized investment on earth, right? All the banks invest in real estate. And so now you own a piece of real estate. Unlike before, if you bought it in a partnership, you couldn't have that liquidity that you can borrow against because you have no liquidity on your own shares. But now that you have your own custody of your assets, you can now use decentralized finance in order to borrow money against it.
And I think that's very exciting. I think the opportunities that come out of that, and we're going to see, it's so right when you say, real estate is the kind of number one collateral asset. Actually, now we're extending that. You might have 10,000 shares in a fund. That in the future, and I don't know where we are with this whole process, you can then borrow against to get more real estate. And there's going to be all these kind of really cool use cases that will come on the back end of it. Ed, it's been an absolute pleasure once again, and I'm sure we're going to have you many more times in the future. The last thing for me to do is to ask you where people can go and find you. Obviously, we'll put links to Red Swan in the description, your Twitter, Red Swan's Twitter, and anywhere else people can get you. But is there anywhere you want to direct people to?
The Red Swan website, www.redswan.io, at least you get a snapshot of everything we're doing. You can sign up there. We're in the process of changing it, but still, I want people to go there, sign up to be part of along the process we're bringing out. But for me directly, I respond mostly to LinkedIn. So if you can connect on LinkedIn, that's one way, or just an email on Twitter. The Twitter email will be also fine. So that's how you can catch me. But I really appreciate being on this panel show. You really cut to the chase in terms of the right questions, and I'm glad that we can talk to your viewership and educate them on the benefits, because that changes. It's going to change their whole way of thinking and investing. Period. And real estate is probably the best place to hedge against inflation in terms of yield, and also to grow in terms of value. So, I speak from somebody who invests in real estate personally and has done well by me. So thank you. Appreciate you on the show.
No, the pleasure is honestly all mine, Ed, and I hope that we can have you back on many more times to talk about your journey, how this sort of evolution of everything is going. I've always been told as well growing up that real estate is going to save you, and I think it has for many, many people, and it's something that personally I'm going to be getting involved in. I'll probably document that journey publicly as well, as far as I can anyway, and I'm sure Red Swan will be getting in touch with to sort of help us do all that. But Ed, it's been an absolute pleasure. Thank you very much for coming on once again.
Thank you. Look forward to coming back. Take care.